Good morning, everybody. It is 7:28 in the morning on this Tuesday of May 15th, 2018. And hello. Hope you guys had a great Monday yesterday. Hope you guys had a good rest of your trading day yesterday. And I know that we did have some great trades yesterday because we were talking about, like, usually Mondays are kind of slow, and then Tuesdays roll around and we get turn around Tuesday, and that's exactly what we have had happen here. So that last week we had that pullback zone and kind of a consolidation zone. Now we're seeing a continuing fallout of these moves this week, which is good. Taking a look at the portal here, just want to remind you that the chat box is here and that if you have questions on there, just go ahead and post them and I'll be paying attention to them. So, yes, take a look at that when you get a chance. Okay, let's take a look at our market specifically. Let's take a peek at the trades that we did yesterday. Yesterday, we had a number of shorts we were looking at. So the first one we looked at was to go short on the Aussie dollar at 75.50. It's 755. And that trade has worked out very nicely. We went short at that 7.5 where we're at 7.55. Worked out beautifully. Continuing to trend lower here. We fell back down below the 75 handle, and that should be considered fairly bearish. So this should be considered a pretty ugly zone. We just had a economic news release just a minute ago here, and now we're seeing continued weakness on the Australian dollar there. We're going to keep our eyes on this because I believe the short we had yesterday. Keep holding the short. Otherwise, we can short at a break of 78.85. The other trade we had yesterday was the New Zealand dollar. We wanted to go short at 69.33. That worked out beautifully. We've had a wonderful amount of pips drop here and continuing to drop lower, but we are coming up against we're coming up against the bottom of the arc here and a major harmonic line. And so the typical behavior here that we're going to be observing is somewhat of a supportive reaction. This is a major supportive zone that we're looking at. However, we want to be wary of two things. We want to be wary of a blow-off move where it drives down below and then it settles on the 6th, 8th harmonic level. We want to be aware of that because that could signal very easily. That could signal some impending type of support back up to the major 3. So we want to be aware of this zone, and I think it's dangerous to trade this area. I think I might have missed a few opportunities. Well, I know I did. I missed a few opportunities on the New Zealand dollar, but hard for the mind to focus on so many things at once and so many moves. Taking a peek now at the New Zealand dollar has been a phenomenal trade so far. It's working out beautifully, and we should continue to watch this one play out. The euro dollar. It says, good morning, Jonathan. To me, covering your exit strategy on your trades. Oh, yeah, Gerald. Yeah, definitely. I'll touch on that. If I don't say it by a quarter to, remind me, and I'll mention that. I know that I've had questions about that before, and I'll go into a little detail about that. So, the gold trade. Oh my gosh, the gold trade is just, guys, this is so many of these markets are just right on the cusp of throwing up all over the place. It is going to be glorious shorting. And I tell you what, you make the most money shorting because it's moves that are short. What I'm saying is, we all know that there's that phrase that markets take the stairs up and the escalator down, or the elevator down, and when you get an opportunity to short, you get a crap ton of movement in a fast amount of time. They're usually very large moves. So I am definitely a person who has a mindset who is natural to be shorting. I think maybe because I was raised a Vikings fan, where I'm just always a realistic pessimist. I'm always expecting the worst to happen. But looking at this gold trade right now, and if I can see, we're getting so extended on these lows, the screen, I have to adjust the scale now. But we're really looking at gold to tackle this 1282 zone now. All right, maybe finding a little bounce here, that's pretty normal, but really ultimately 1282 is where we're thinking of poking down on gold. So the gold trade is working out beautifully at 13.18 is where we wanted to go short. That is just awesome. 13.18.89, beautiful short position down here. The euro. Another continuation here. We had this leg up. I don't know how many people might have gotten hit with a possible inverse head and shoulders trade they were attempting, but ouch, regardless. So looking now at the euro dollar pair, we wanted to go short yesterday. Actually, we said go heavy on the shorts at 120.25. Did I say 120? Maybe I meant 119.25. Or did I mean if we traded up to that? I didn't really give another. Oh yeah, Sorry, we did a short at a break and hold of 1960 of a short at a break and hold below 1969. That's right, and which we did get, and that has worked out very nicely. We are continuing to fall in the euro. Oof, man, this is gonna be a big mover. I posted an idea yesterday, 2 days ago, maybe 2 days ago, on the euro. 15 hours ago, total capitulation ahead, and I wrote that the target is 108 and beyond. Maybe targeting parity. We'll see, but it's a bit of a drive down here. We're looking at. This is the third leg that we're probably looking at forming, and it's going to be a pretty violent leg. Going to be a pretty swift drive down. So if we got in that short, if we missed a short, we're looking for a pullback probably to the 1890 area. Maybe if we get up there, we'll have to see. Looking at our next trade, we did that. Okay, then Bitcoin, we want to go long and return 9100, which you didn't get yet, but cryptos are certainly catching a big bid here. Now to answer Gerald's question on my exits. That is a question where I have difficulty answering because I myself, and this may sound, a little like anathema to a lot of traders, but I don't have a very concrete profit target. I like to let things run, and I've learned that as I've learned about my own emotions and my own responses to prices moving, and my own kind of intuition about when something may kind of turn in the short run, where it may be it may be an overly large pullback, and I don't want to lose that profit, I may leave. But I don't have a very concrete profit target that I exit at. The only ones that I do have, and I suppose I could point those out, is when I'm looking at my chart here. I look for geometric levels to scale off some of that profit. So we're approaching one right now. We're approaching this arc, and that to me is going to be a very natural place to anticipate taking some profit off. But if not that arc, if I'm seeing it show not a lot of strength to buy, and if I'm not seeing a lot of buying pressure here around there, then I'm going to hold it. But certainly when we return to this 45, that's going to be a zone that I'm going to be looking at taking some profit. The other way that I like to look at it here, oh my gosh, the Aussie dollar is just going to, I think we're witnessing a collapse, folks. You know, there's so many ways to identify what your profit target should be. Some people say, you know, like it should be 1.5 to twice your risk. You know, I feel like you get burned a lot trying to do that. I have always lived by the mantra: nobody ever went broke taking profit early. And I tell you what, the longer I've traded, I get more upset about the entries and the trade opportunities that I miss rather than the targets that I lose. And I do get upset when I take something off early in profit, but I would rather exit early with profit than hang on to it and lose profit or actually let it run back to even or take it in a loss. You know, I think the hardest thing that happens as you trade and you get more success, well, I don't know if success, but you get used to trading, is that, at least for me, profit targets are something that is a lot more dynamic. And it's very hard for me to decide what is a profitable entry to leave, because a lot of times, I mean, to be honest, like I'm looking at the MAM account right now that well, okay, I'll pull this up here. So this is our MAM account. I manage this for Forex Lens, and these are the open positions right now. And you know, this morning I took some profit early, just because we had some news coming up, and I saw some little bit of pullback happening prior to the news. I didn't want to leave that profit just kind of sitting there to lose a lot. So if I go to account history, and I'm looking at, this is for this month, right? Custom period. Oh, why is it over there? Yeah, that's so this for this month. So $9,146 we've gained on this month, and so this morning's trades I exited those. Exit one at a loss for $91, but then 130, 608, 895, and oh wait a minute, that's not right. They're over here. Gosh, I hate it when they. This is what's frustrating about this, is that this broker, it's irritating, but took trades here, sold here. These are all supposed to be trades from today that I closed. I don't know why that is. It doesn't like that, but see, I even closed one on the pound at $15 because I didn't like what was happening in the short term prior to the news. So the ones that had a fair amount of profit, but you know were kind of on the edge of something that could fluctuate a lot, I just took them off the table. You know, it's one thing that you probably could do. One thing that I think that is something that may help with identifying a profit target if you're not using the market geometry is, let me get the 4 hour. And I tell you, on the square of 90 here, square of 144, when I look at a profit target, like this angle here is where I'm going to be exiting all the euro trades I have open. Gain or loss, any euro trade I have open that I get down to this angle, I'm gonna take it off the table, because this is a pretty expansive drive down in a very expansive range between these angles, that there is generally a fairly strong bounce from this zone. So I'm going to be taking profit really around the 117, probably the 117.80, 117.70 zone in the euro. But if you're using the Ichimoku system, as far as as far as identifying what would be a profitable area, and I love the Ichimoku system, and dang it if it doesn't give you a little different idea of what's happening, because right now on the Ichimoku, kind of going on a tangent here, is that when the leggings, when you experience a pullback like this and you're trading into here, this is the 4-hour chart. Now we're trading back below the cloud, but the lagging span is inside price. We don't like to trade inside price with the lagging span. So what you have to wait for is the lagging span to break out back down below or outside. It has to be trading outside and below price. And so from this type of analysis using Ichimoku, to me this is looking like another short entry right at this area. I just want to wait for confirmation. So where I might be taking profit here pretty soon, Ichimoku would probably be saying, let this sucker run for a little while yet. We'll have to see, though. We'll have to see. But with the Ichimoku system, you have a pretty good idea of when to take profit, because actually, let me pull up the clouds. I think the Ichimoku system gives you a really good rule to follow with taking profit. Let's look at the pound dollar. Oh my gosh, I deleted all my... Ooh, hey, look at that. Blah, blah, blah. Gotta put that trade in. Ding, 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 hourly short signal on the pound dollar. Okay, so looking at, gosh, I gotta fix this. I hate the default settings of. Wait a minute, I think I like that one blue. Okay, so one of the nice things that you can do, so let's say we were short from the euro in the Ichimoku system from up here, and we're trading down and we're trading down, and then it's like, well, where do I start to take profit? I like to take profit when the lagging span starts to go inside the candlesticks. That is a good time to take profit. Now, could have you held on to it and all of a sudden it starts trading lower? Yeah, you could. But when the lagging span starts to enter the candlesticks here and starts trading inside of them or around them like this in close proximity, it's no longer right outside of it and lower, then to me that's a early warning sign of consolidation, short-term consolidation, maybe possible trend changes happening. I don't want to participate in it. I want to take my profit and sit back, and that indicator is not supposed to be active on this. And so, I'll wait until the lagging span clearly breaks below again the price. But in the Ichimoku system, I think it does a good job of telling you when to take profit based on the lagging span. And so if you like to trade the market geometry like I do, then one thing that you could do is to use the Ichimoku system, but just turn everything off except for the lagging span. And so then we know with the lagging span, if the lagging span is on, we know when where our target area to take profit would be at. Does that kind of help, Gerald? Is that I'm trying to find the best the best answer for you because I don't have a concrete targets. I have like an area I like to hit, but if there's one thing that I think that can help keep you in if you're not using the full Ichimoku system, which I would recommend, nobody should be doing this unless you know what you're doing. But if you don't like using the Ichimoku system, but you don't have a clear profit target area, but you'd like to know when to take a trade, I would say turning on the lagging span only in the Ichimoku system, and that can really assist you in finding a good area to take profit or peel some profit off. I want to take a quick look at UJ because we have a screamer on our hands here. We have a total massive, just crazy. This will probably be one of the best calls I've ever done. I am not a huge Gartley fanatic. Okay, this is a Gartley pattern here. This shape, and I am not the biggest Gartley fanatic on the planet. However, I do place a lot of credence in them on longer time frames, and I believe I have an idea on it back on March 1st. March 1st, I did this Gartley, and this is a bearish shark pattern, and this is based on the weekly. So Gartley patterns based on a weekly and a monthly, I don't think that you can really go wrong including it in your analysis. You're welcome, Gerald. I don't think you can go wrong using this in your analysis, but anything anything less than a week, I wouldn't use it. I know there are a lot of people that this is their primary form of analysis, and I bet they follow it like I do Gann stuff. It's just, I guess for me, I have not found it to be that effective on short time periods. And you can that goes for like a great majority of analysis. And holy cow, is gold taking a metric crap right now. Love it, love it, love it, guys. We are looking at a real drive and some game changing. We are looking at a historical throw up in price here. This is crazy. I'm getting stupidly pumped. We need to break this trend line, and I'm gonna get back to what I was talking about, but I was just watching this on my on the MAM account. We have this channel here, right? Let's bring it over to a monthly. Let me pull up my other software. Now, I don't know about you, but we know what bear flags and bull flags are. And if you don't know what bear flags and bull flags are, we'll do a little quick scenario. And pennants. Pennants and flags, they happen off of a trending move. All right, so in a down move, like right here, let's go to, you know what, I'm just not going to try and make it any more confusing than I need to. Let's look at the Euro Yen. Or US dollar, Canadian dollar? I want something that I can clearly see as an example. Well, I was going to say they show up a lot, but I'm certainly struggling. You can never find them when you want to find them. But right here, on a monthly chart. All right, and let's go hide. There we go. Okay, so this is a monthly chart. We've had a down move ever since the high here on in September of 2011. All right, so we've had a down move, and a flag is anything that starts to kind of trend counter to it for a little while, but it starts to weaken as it moves up. All right, so this would be actually this entire. Technically, we would say that this entire drive here is a flag. A bear flag, and bear flags are a counter trend move after a they're a counter trend move higher after a bear trend. And so what we're looking at is something that looks like reverse. Now this is a monthly chart, all right, and we're looking at rising prices ever since September of 2016. Okay, so January of 2016. So for over 2 years, we've had a bull trend off of this. Now, as I'm looking at this, and I know what technical analysis says about flags, is that this drives and falls down further a lot. And why is this important? It's important because of the area that it is. This is the earliest data that we have on gold on this chart in TradingView. But from these lows, from drawing trend lines from these beginning lows here, that's these trend lines right here. We are in an accelerated position or an elevated position in our oscillators on a monthly chart right next to this very, very, very important trend line. And we are more than likely going to blast through below it. We are more than likely going to collapse through this and then find some type of support here and retrace all the way back up before even falling further. There is a literal no man's land below us. If we want to see how freaky this is or exciting this is, personally, I get stupidly... I nerd out about this stuff. I love this stuff. Volume profile, visible range. Let's change this up a little bit. Gerald, can I ask you quick, have you found a benefit from being here with us in the morning? I'm just asking. I want to make sure that you are getting your money's worth. I want to make sure that I'm giving out information or signals that are beneficial. So here, if I'm looking at this as the entire volume profile, entire history of the gold chart right here, all right? And where we're trading at right now is, I have it listed as the 35% of the volume. This is the max value area that we're trading in. In fact, we're just trading slightly below the point of control. And the behavior of a market profile or volume at price analysis is that we look for high volume nodes and low volume nodes. Where price is at, when we get lower, where you see these areas where the volume starts to taper off, that means that price gets sucked into these zones. It is really easy for price to fall into this area. Okay, it's very easy for price to move lower than it is to move higher. As we get lower prices, it'll just collapse. It'll be so fast. I mean, we're talking we could probably move 10% lower over a week and a half's period time in gold, and we're at major risk of falling below this trend line here. these trend lines. I don't want to extend the one to the left. I just want to extend it right. Make it thinner. So we are getting very close to a total. It's crazy. It's crazy. What's this look like on the hourly? Oh my gosh, that is such a beautiful, 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 beautiful candlestick. Man, I love it, love it, love it. Oh, what am I doing? Nice, nice, nice. Man, it's crazy drive. The euro. Clouds. I want to go back to here. There we are. Euro. Wow, absolute destruction happening here. Dollar yen. I'll face some resistance at the 45. That should have been a known though. Should have been expecting a little bit of that there. But it's obviously going to it's obviously going to trade up higher. U.S. dollar, Canadian dollar, great drive up here. Fudge! I didn't put in that trade earlier this morning. Damn it! I thought I did. Sorry about that. Thanks, Gerald. Yeah, that gold trade I think is going to probably between gold and the pound. I think we're going to have I think we're gonna have a pretty nice, pretty nice year. Usually around this time of year we start to see some tapering off in participation. Certainly as we get into June and July and August, those are kind of the doldrums of trading. But thankfully, for at least for futures trading and stocks and equities, thankfully though, I think because of cryptocurrencies and Forex, I think we're going to get a lot more market participation. One of the thankful things I think that is great for Forex as a whole is that cryptocurrencies have brought in so many new people that want to trade, and they've people who have traded cryptos, they're that's the only thing they've ever traded, and it's very accessible to them. And when cryptos are experiencing kind of a down run or whatever, there is a lot of people coming from cryptocurrencies as their first traded market into Forex, which I think is fantastic. I think Forex is a much easier. I think it's much easier to trade than anything. I think Forex is very logical, and I don't put a lot of credence in the manipulation component of it. I think that is always an excuse that people make for why they lose money. It's manipulation. Are there market manipulators? Yeah. Are there bad actors? Yeah. There's a guy in there was a dude for HSBC. Ex HSBC banker. He was front running clients. This guy. Now, here's the deal. All right. This guy's probably just an okay dude, and he's not doing anything different than anybody else did, except he got caught. Well, for whatever, they caught other people, but for whatever reason, he's being made an example. And I think maybe because over the recorded phone calls, he was being kind of, I think we got away with it. Front running, if you don't know what front running is, it's so for Forex brokers get accused of this all the time. So what front running is that, let's say you want to buy 10 lots of the euro dollar, and your broker has that come in, but what your broker will do is he'll put in his own order ahead of yours, so that when your order goes through, if it moves the market, he gets the benefit of your risk, and the broker gets to capitalize on your money being risked. So that's what front running is. It's legal, it's unethical, and it's shystery. Anyways, euro gosh, man, we are gonna be in some big moves down in a lot of these instruments. Jeez. I can't believe gold's move. I can. I just thought it would isolate and consolidate a little bit more, but man, it is not showing any signs of weakening here. It's crazy. The other thing I want y'all to think about gold is that it is I'll think about it this way. There are only two types of currencies on the planet, really, dealing with money. There's fiat, which is just a mythical pixel fairy dust, guaranteed by people of a country. And then so there's fiat currency, and then there's commodity-backed currency. So like when currencies used to be backed by gold. Well, they say every single fiat currency crashes. That's true. But so has every single commodity-backed currency. That's always crashed too. So we go through these currency cycles, and they're not talked about a lot, but they happen all the time throughout history. Just like any market cycle has a cycle, currencies have a cycle too. Currencies collapse, they readjust, they get revalued, and they keep going. The British pound is a perfect example. The British pound has been around for over, 1,000 years, literally, maybe. I know it's older than 500 years old, but the British pound has been around. If you want to bet on a currency lasting for a long time, bet on the British pound. That has been around for centuries. How many other currencies can say that? But the British pound, it has gone from commodity backed to fiat to commodity to back and forth. But here's the thing. Gold is a risk-averse asset. People like to hold on to gold because it has some value. There's something taking gold's place, and that is cryptocurrencies like Bitcoin. All right? Cryptocurrencies are a new currency. They are not controlled by a government. They are not backed by a government. They are not guaranteed by the trust of the people of any particular government. And they are not backed by a commodity like gold. Gold loses its security and its value as a risk-off asset when cryptocurrencies came along. Gold could very well in the future just be good for industrial applications. And cryptocurrencies could supplant gold as a risk-averse asset. And if that were to happen, oh man, you're going to have a rotation of capital like we've never seen before. We're going to see the abandonment of the hard metals as a security asset being totally replaced and thrown into cryptocurrencies. And I tell you what, whatever the global value of hard metals is, being even a portion of that being churned into cryptocurrencies right now, it's going to boom that market. You want to take a fundamental long-term risk approach? That's one. I've my own portfolio. Well, I have Edward Jones manage my own retirement because I'm really risky as a trader. I recognize that as a trader, I should be doing very little to manage my own retirement and financial future. Even though I'm successful at it, I'm human, and I can. And everybody who's been trading for any amount of time knows that what can take you years to accumulate can take 2 days to wipe out. And I've blown a number of counts in my day. So, so having somebody else look after me is better than me looking after myself. I've always said that that's kind of like an attorney who represents himself in court is the biggest fool in the room. A friend of mine who's an attorney told me that. But I've shifted so much out of metals. I don't think it even represents 1% of my own portfolio anymore for retirement or for security. It is sitting in cryptos right now. Anyways, let's take a real quick look at gold one more time, continuing to show a lot of weakness here. The euro maybe catching a little bit of a bounce. Wouldn't try to catch that knife. Dollar yen driving up higher. Pound dollar. We might have seen the extent of the moves for the day on these, especially in gold. So taking some profit off is not a bad idea. In fact, I am exiting these positions as we speak in the Mammoth because being $4,800 in profit says I'm done for the day. I'm going to wait for a pullback on these guys later on. Or if they break new lows, I'll re-enter. But certainly we want to wait for a pullback on these. But yeah, we've got a few trades in. We're certainly holding the majority of our trades from yesterday. Peeling some off of the profit for right now. That's what I just did. Actually, I closed all the positions. I mean, total transparency, there's no positions open right now. Our monthly gains, 13,839 for the month. That's halfway through the month. That's good. We'll see how much I can wipe off of that. Good markets that we've got going on here. Expect a bounce going into the afternoon, certainly, and the whole take profit on these trades because barring anything crazy happening where we even thrust down lower, I would expect things to consolidate and chop around a bit. So we got in them early. That's good. Takes them off the table. And sometimes just taking a break from the rest of this for the day is a good idea. And yeah. Anyways, y'all take a good look at your positions. Take some profit if you need to, and take care of yourselves. Look out for what is happening in these markets, price action wise, and yeah. Have a good rest of your trading day, and I will visit with you all tomorrow. Bye-bye.